Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The start of the original big mover back in November last year was generated by the very large bright red April to October 2024 ascending wedge pattern. The most recent large leg up here was from the mid-January this year, pushing and closing over the early December 2024 high at 348.35 and into new territory, such that by early February the market had broken higher over the latest 50% projected Fibonacci line at 402.05, reaching up to a high of 429.95. Prices then had a pullback into late February and a fresh rise and fall also 2 weeks ago. Last week's action is significant as the market did not make a new all-time high, thus sowing some low-level bearish doubts, however minor they may be, into last week's action, significantly staying below the 50% projected Fibonacci line at 402.05. All this action allowed me last week to draw a dark blue late December 2024 to late February 2025 bullish shift pitch hawk. As I said last week, and I quote, "This is a nascent prospective bullish shift pitch hawk, and I'll be especially interested to see if the lower time, currently at 385.85, has the desire or application to support the market." End of quote. Well, since then it looks like this week the market does not have the necessary desire or application to support the market, and today is actually acting as a resistance after last Friday's fall. Prices have not as yet pushed down through the late February's lows at 366.30, but in the great scheme of things we're not too far from doing so. Below this we really have the rising green short medium moving average currently at 364.70, and then the early December 2024 to date bright red uptrend currently at 353.30. Now this would normally be all, but because of the declining high in early March, it has allowed me to draw my first bearish Andrews pitchfork here in bright green for the early February to early March move, the first bearish pitchfork of any sort for quite some while. I've kept it at the sharper bearish Andrews rather than the shallower bearish shift pitchfork, purely because it fits in with the recent action, though it is still a very nascent bearish pattern. However, it may usurp the previously dark blue bullish pitchfork in showing the angle of attack of this market. The rest of the month of March will prove to be very interesting as we see this develop. So what else? What now? Well, for this I'm indebted to Ray Bradbury for asking me about New York coffee 4 weeks ago, and I went to my longer term charts and the monthly charts where we can see some possible insights there. You see on the monthly charts, the longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed these charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom for bright red neckline on my daily chart currently at 273.80. The break higher over this neckline has already reached its primary target, but it's still open the secondary much harder to reach target X up in the 433.35 area. What is interesting about this is that nearby to target X is the next 100% projected Fibonacci line at 433.75, also quite close in the scheme of things. So what does this mean? Does this mean the market will turn at these levels? I could not say, not yet, though we did have a possible shooting star pattern last month, and I'm wondering if right now we are trying another attempted shooting star pattern this month. You see, shooting star patterns are usually seen as bearish, though there is actually a bullish variety. What I can say is that if there was ever an area where the market could hesitate on the top side, then this 433.35 to 433.75 area would be a very reasonable choice. I'd watch that area and any approach to that area very closely. It may even be that last month's shooting star pattern may have been the final move in the attempts higher, just under target X, but as yet it is too early to say on these longer term monthly charts.
London coffee.
15 weeks ago I drew a new large pattern that encompasses all the recent significant elements. It's not ideal, and it is quite large, but it does show promise. It is the bright red, shallow, large bull channel, currently 46.67 to 59.72. Now, within this pattern sits another pattern, just about, an early November to early December 2024 bullish shift pitchfork, highlighted in dark blue on my daily chart. Right now, prices are testing for a fourth consecutive week the combination of the dark blue lower time, currently 54.34, and the slowly rising green short medium moving average, currently 54.04. This shallower dark blue bullish shift pitchfork has shown the bullish angle of attack of this market since its inception, and the support seen there from the lower time was there back in mid-January. And the support seen over the last 4 weeks or so adds some legitimacy to this pattern idea, though as we can all see, it is being very tested right now. There are also two other patterns to consider here, both of which I pointed out 4 weeks ago. They are a late January to late February small ascending triangle, highlighted in bright green on my daily chart, which saw prices break lower from and thereby created the second pattern, a double top for the same period, an Adam and Eve double top. Both the primary and secondary targets for this ascending triangle have already been reached, and as for the double top pattern, the primary target was reached 3 weeks ago, leaving only the secondary harder to reach target X at 51.28 below still open. This target is just above the small congestion zone seen in late February 2024 to January 2025, between roughly 48.40 to 5100, that formed back then a small double bottom, as well as seeing the mauve slowly rising medium moving average, currently 51.45, pushing up through the congestion zone. However, to further achieve the outstanding target X on the downside, prices first need to break down through that previously mentioned green short medium moving average and dark blue lower time, which, to be honest, they have been trying to do now for a fourth week. I'd only add this final thought. I've drawn a new purple downtrend, currently at 56.68, from the mid-February to high to date. This is a nascent downtrend, but it is just about a three-pointer, so it deserves some respect. My only other thought on this is that the action from mid-February to date could have a nice descending triangle, utilizing the purple downtrend and the base on the 5300 zone. I'll say no more on that on this matter at this time.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.